Norway is in the home stretch to becoming fully electric. No other country gets even remotely close to the Scandinavian kingdom's latest EV market share of 94%, a new world record.
The policy is not just about promoting EVs, but it's also about punishing petrol and diesel engine cars. They're pretty much taxed so much that they're getting less and less interesting to buy.
In July, Norway's government introduced a measure which makes the leasing of combustion cars financially unattractive. Most expected Norway to miss its target of reaching 100% electric vehicle sales by the end of the year. But thanks to new financial incentives, the Scandinavian kingdom made a big leap this summer, and dealerships are about to get rid of their last combustion cars. Meanwhile, electric cars from China are becoming more and more popular in Norway, increasing their market share to 23%, according to the sales database OFV. BYD was able to triple its sales in Norway, while NIO rose by almost 50%.
Norway, with the subsidies and the incentives from the government, it's a perfect first step for Chinese brands to sell in Norway, and we see that has been a success.
In contrast with the European Union and the United States, Norway is not imposing tariffs on electric cars imported from China.
Norway has no particular policy for Chinese cars than any other country's electrical vehicles. So we have the same policy for China as for other countries.
So Norway doesn't have any tariffs on Chinese EVs, and I think competition is good, and it's important that we have a big player like China that is going forward and pushing the rest of the world to follow.
Pushing the rest of the world to follow is something both China and Norway have in common, at least when it comes to electric vehicles. Johannes Pleschberger, CGTN, Oslo.